Hello Year 12s, it's too hot to be outside and the only thing on TV is the cricket. It's therefore the perfect time to watch a video on business objectives. We have already looked at the different types of businesses, that is, sole traders, partnerships, companies, government business enterprises and social enterprises. In this video, we are going to be looking at business objectives. Now there are 4 things that you need to do while you're watching this video. The first thing is to take the very best Cornell notes that you can. The second thing is to draw up in your summary book the 3 tables that I describe later on in this video. The purpose of these tables is to enable you to summarize the information contained in this video. The third thing that you need to do is to use the pause and rewind functions. Use the pause function if you need to stop this video to take notes and in particular to fill information into the summary tables that I have referred to. Use the rewind function if you feel that you have missed any information and you want to go back over that information. The fourth thing that you need to do is to have your vocabulary sheet handy in front of you so that you can include in it definitions of any important terms as well as definitions of any words that you may be unfamiliar with. Once you've finished watching this video, there are 2 things that you need to do. First, you need to read the pages of the textbook referred to on the first slide of this video and supplement your notes with any information from that reading that you think may be useful. Second, you need to complete the worksheet that sets out questions about the content of this video. This will be a good test of how well you've understood that content. On this slide, I've set out the learning intentions for this video. You can see that there are 2 learning intentions. The first learning intention is that you should be able to describe the different types of business objectives. The purpose of this video is to assist you to achieve this learning intention. The second learning intention is that you should be able to apply these concepts to case studies. This learning intention will be achieved by you completing the worksheet on business objectives that is attached to the Compass learning task for this video. Please make sure that you write down each of these learning intentions in your Cornell notes. Well, let's get started then. In order to succeed, a business must have clear objectives. A business without objectives is like a car without a driver. Just like a car without a driver will wander all over the road and probably end up crashing, so a business without objectives will have no clear focus or direction, and therefore runs a high risk of failing. This leads us then to the first important definition which I want you to include in your vocabulary sheet. Look down the left-hand side, find the term business objective and write the following definition of that term in the box opposite that term. A business objective is a target that a business wants to achieve. Please highlight the word target and make sure that whenever you define the term business objective, you use the word target. Never define a business objective as a goal. Don't define a business objective as a goal that a business wants to achieve. A goal is an objective that is set for an employee, not for a business. A business should set its objectives using the SMART principle. SMART, S-M-A-R-T, is an acronym which describes the 5 characteristics that a business objective should have. Please draw this table up in your summary books. You can see that in the left-hand column of this table, I have listed each letter that makes up the SMART acronym. In the second column, next to each letter, I have stated what that letter stands for. In listening to the commentary on the next slide, you need to be able to fill in the third and fourth columns of this table. Well, let's look at each of these characteristics of a business objective in more detail. First, S for specific. The objective must be clearly defined and identified. So that's the meaning of the S characteristic that you should include in the third column of the table in your summary books. An example of a business objective that does not have this characteristic is an objective that states that the business wants to make a large profit next year. What's a large profit? Is it $10,000, $1 million, $5 million, or even $50 million? It's very unclear. A better way of stating this objective might be to say that the business wants to increase its profit next year by 10%. That's a much more clearly defined and identified objective, and that's an example of a business objective that satisfies the S characteristic that you could include in the fourth column of the table in your summary books. Second, M for measurable. Performance against the objective must be able to be measured. So there again is the meaning of the M characteristic that you need to include in the third column of your table. An example of a business objective that does not have this characteristic is an objective that states that a business wants to sell products that make its customers happy. Well, it's a good ideal to have that you want to make customers happy, but how do you measure customer happiness? And how do you know whether any increase in customer happiness is a result of your business selling products to those customers? A better way of stating this objective would be something such as the business wants 80% of its customers to buy a second product from the business within 2 months. For example, if a cosmetics business has this objective, and if 80% of its customers who have already bought cosmetics from the business return within the next 2 months to buy more cosmetics from the business, then this suggests that the business's customers are very happy with its products. The difference is that it is much easier to measure the achievement of this objective because the business can track whether a customer returns to the business and buys products from the business within the next 2 months. So that's an example of a business objective that meets the M characteristic that you might want to include in the fourth column of the table in your summary books. Third, A for achievable, sometimes referred to as attainable. This means that the objective must be one that can be reached. There again is the meaning of the A characteristic, which you should include in the third column of your tables. An example of a business objective that does not have this characteristic is an objective that states that the business, perhaps being a clothing business, will capture a 90% share of the clothing market in Victoria within the next 3 years. Now, it's very unlikely that a clothing business will achieve a 90% share of the Victorian clothing market. There are a huge number of clothing businesses in Victoria that compete against each other, and so it's really unlikely that just one clothing business will get such a substantial share of the market, whether that's within the next 3 years or indeed the next 30 years. So this is an example of a business objective that is not achievable. On the other hand, an objective that is likely to be achievable is that the clothing business achieves a 5% share of the market for school shoes in Melbourne within the next 3 years. Do you see how by refining the market and reducing the size of the target market share, we have now made this a business objective that is achievable? And that's an example that you might want to include in the fourth column of your tables. Fourth, we have R for realistic, sometimes referred to as reasonable. The objective must be able to be reached within the set time limit, that is, within any time limit which is set out in the business objective itself. So there's the meaning of the R characteristic that you should include in the third column of the table in your summary books. An example of a business objective that does not have this characteristic is an objective that states that a new business will expand from having just one outlet to 20 outlets within the next 3 months. That's a 2,000% increase in the number of outlets that the new business has. That is, they are increasing the number of outlets they have by 20 times. And given that it's going to be necessary for that business to rent or perhaps buy those premises, to fit all of those premises out, and to recruit and train employees to operate the business from those premises, it's highly unlikely that the business will be able to achieve that objective, that is, of increasing its outlets 20-fold within the next 3 months. A more realistic business objective might be for the new business to grow from 1 outlet to 2 outlets within the next 3 months. And that's an example that you might like to include in the 4th column of your table opposite the R characteristic. Now, you may ask, well, what then is the difference between an objective that is achievable and an objective that is realistic? Well, the difference is this. When we are assessing whether an objective is achievable, we are asking whether it is likely that the objective can be reached within the longer term. That is it something that can be achieved within, say, 5 years, irrespective of what time frame might actually be set out within the objective itself. However, when we are assessing whether an objective is realistic, we are asking whether it is likely that the objective can be reached within any time limit that is set out in the objective. So this means that an objective may be achievable but not realistic. For example, it may be that a business has the objective of increasing its market share by 5% within 1 month. That objective might not be realistic because the 1 month time frame is simply too short a time frame for the business to increase its market share by 5%. However, it may be that the business could increase its market share by 5% within, say, 5 years, not within the 1 month that is set out within the business objective itself. So in that case, the business objective is achievable but not realistic. This then brings us to the 5th characteristic under the SMART principle, which is T. This stands for time-bound or timely. And this means that the objective must have a time limit within which it is to be reached. So there's the meaning of the T characteristic to include in the 3rd column of your table. An example of a business objective that does have this characteristic is an objective that states that the business will increase its sales within the next 12 months by, say, 10%. This is an example of an objective that is time-bound because it includes within the statement of the objective a time frame for achieving that objective, that is, within the next 12 months. So, in summary, when you are analysing or assessing a business objective, you need to analyse or assess the extent to which that business objective meets each of these 5 characteristics. That is it specific? Is it measurable? Is it achievable? Is it realistic? And is it time-bound? This brings us to the second part of this video, where we are looking at how the different objectives of a business relate to each other. For this purpose, we can think of there being a hierarchy or ranking of business objectives, with business objectives ranging from the longer term and higher level objectives right through to the shorter term and more detailed objectives. Please draw up the table that you see on this slide in your summary books. You can see that it has 4 columns, and in the left-hand side I have ranked business objectives from those that are the longest term and highest level, which are contained in a business's vision statement, right down to those which are the shortest term and most detailed, which we refer to as operational objectives. In the next slide, we're going to investigate each of these objectives in more detail. Every business should have a vision statement. A vision statement is a statement that outlines the aspirations, that is, hopes and values of the business. In your vocabulary sheet, look down the left-hand side until you come to the term vision statement, and opposite that term, write in that definition of vision statement. Then highlight the words aspirations and values. If you're asked to define the term vision statement, please try to remember to include the highlighted words in that definition. Now, turn to your summary books where you've got that table that you've drawn up. You'll see that the second column is entitled Purpose of Objectives. You can now describe the purpose of the objectives in a vision statement, and that is to outline the aspirations and values of the business. In other words, the vision statement for a business sets out what the business wants to become in the future. It's looking very much at the longer term. Correspondingly, the objectives which are set out in a business's vision statement are high-level objectives that relate to the business and the relationship that the business wants with its customers, shareholders and employees. And in that dot point, you have a description of the nature of the objectives in a vision statement, which you can include in the third column of the table in your summary books. Well, let's look at Domino's Pizzas as an example of the kinds of objectives that you'll find in a vision statement. In Domino's Pizzas vision statement, it sets out its objectives of being number 1 in people and number 1 in pizzas. In other words, Domino's Pizzas wants to be the employer of choice for its staff, and it wants to be known by its customers as making the very best pizzas. So there you have some examples of the kinds of objectives that are included in a vision statement, and you can include those examples in the fourth column of the table in your summary books. Now, many of you will be aware that Domino's Pizzas has been accused of underpaying its employees. And so it seems to have some way to go before it can achieve its vision of being number 1 in people. Nonetheless, this illustrates a very important point about a business's vision statement, which is that the business's vision statement is not intended to describe the business as it actually is, but it is intended to describe what the business wants to become in the future. In addition to having a vision statement, a business should have a mission statement. A mission statement is a statement that defines the core purpose and focus of the business. In your vocabulary sheets, look down the left-hand side and you'll find the term mission statement. Write that definition in opposite the term mission statement. Once you've done that, highlight the words purpose and focus, and if you're ever asked to define the term mission statement, try to remember to include the highlighted words in that definition. Then turn to the table in your summary book, and you can now describe the purpose of the objectives set out in a mission statement as being to define the core purpose and focus of the business. Another way of looking at a mission statement is that it sets out in a more concrete way the the way in which a business intends to achieve the objectives set out in its vision statement. In other words, the objectives in a mission statement relate to the achievement of the vision for the business as set out in its vision statement. And in that dot point, you have a description of the nature of the objectives in a mission statement, which you can include in the third column of the table in your summary book. Well, looking at Domino's Pizzas again, in its mission statement, Domino's Pizzas states that its objectives are to have more fun and to sell more pizzas. You can see how these objectives relate to the higher level objectives contained in its vision statement. By saying that it wants to have more fun, Domino's Pizzas is indicating that it wants its employees to enjoy working at Domino's Pizzas. And it's in that way that it hopes to achieve the objective set out in its vision statement of becoming number one in people. Similarly, in its mission statement, Domino's Pizzas states that its objective is to sell more pizzas. Now, to sell more pizzas, it's going to have to ensure that its pizzas are high quality and that its pizzas are value for money. And in that way, Domino's Pizzas hopes to achieve the objective set out in its vision statement of becoming number one in pizzas. So again, you have some examples of objectives contained in a mission statement that you can include in the fourth column of the table in your summary books. Not only should a business have a vision statement and a mission statement, but it should also have a value statement. A value statement is a statement that outlines the corporate values of the business. So there's a definition that, again, I want you to include in your vocabulary sheets opposite the term value statement. Once again, highlight the words corporate values and make sure that if you're asked to define what a value statement is, that you use that these highlighted words in that definition. You can now turn to the table in your summary book, and in the second column you can describe the purpose of the objectives in a value statement as being to outline the corporate values of the business. Now, as such, the sorts of objectives that you would expect to find in a value statement relate to things like integrity, honesty, ethical behaviour, social responsibility, and the environment. And in that dot point, you have a description of the nature of the objectives contained in a value statement, which you can include in the third column of the table in your summary books. Well, again, let's take Domino's Pizzas as an example, and when we look at their value statement, we see that this includes a number of values, such as treating people as you like to be treated. And that indicates that Domino's Pizzas has an objective of having its employees treat its customers well, and also of having an objective of having its employees treat each other well and with respect. Other objectives include producing the best for less, that is, providing value for money. Setting the bar high, that is, providing high quality pizzas. Training and never stop learning, that is, Domino's Pizzas invests in training its employees to give them the skills they need to perform to their maximum potential. And finally, we see that there is the objective of promoting from within. What this indicates is that Domino's Pizzas has an objective of providing a career path for its employees. So again, there are some examples of objectives in a value statement that you can include in the fourth column of the table in your summary books. Well, we now come to the concept of corporate objectives. Corporate objectives are objectives that set the strategic direction of the business. So here's yet another definition that you need to include in your vocabulary sheet opposite the term corporate objectives. Please highlight the words strategic direction and business, and make sure that if you're describing corporate objectives, you use those highlighted words in that description. Now, what then is the purpose of corporate objectives? Well, the purpose of corporate objectives, as the definition says, is to set the strategic direction of the business, and you can include that description in the second column of the table in your summary books. Corporate objectives are long-term objectives, which means that they have a term of between 2 and 5 years. What this means is that a business will want to try to achieve its corporate objectives within the next 2 to 5 years. In addition, corporate objectives are objectives that relate to the business overall. An example of a corporate objective is that a business wants to increase its profit by 80% over the next 5 years. You can see that this is a long-term objective in the sense that it is to be achieved by the business within 5 years. You can also see that this is an objective that relates to the business overall because it's focused on the profit of the business overall. So again, using that dot point, you can complete the tables in your summary books by describing the nature of corporate objectives. They are long-term objectives. They have a time frame of 2 to 5 years, and they relate to the overall business. And you can also include an example of a corporate objective in the fourth column of that table. We now come to tactical objectives. Tactical objectives are objectives that set the medium-term targets for a business unit. Again, please include that definition in your vocabulary sheets opposite the term tactical objectives and highlight the words medium-term targets and business unit. Whenever you're describing tactical objectives, try to remember to include those highlighted words in that description. You can now complete the second column of the table in your summary books by describing the purpose of tactical objectives as being to set the medium-term targets for a business unit. When we refer to the medium term, we are looking at a time frame of between 1 to 2 years. So tactical objectives have a time frame of 1 to 2 years, that is, their medium-term objectives, which means that the business will aim to achieve those objectives within that time frame. In addition, tactical objectives don't relate to the business overall, but they are focused on, that is, they relate to individual business units. So an example of a tactical objective for the marketing department might be that the marketing department will ensure that its costs, that is the costs incurred in marketing, do not rise by more than 5% over the next 2 years. You can see that this is a tactical objective because it has a time frame of, in this case, 2 years, that is the medium term, and it's also a tactical objective because it relates to an individual business unit. It's a target for the marketing department as opposed to a target for the business overall. So, using that dot point, you can now describe the nature of tactical objectives in the third column of the table in your summary books, and you've also been provided with an example of a tactical objective that you can include in the fourth column of that table. Last but not least, we have operational objectives. Operational objectives are objectives that set the short-term targets for a business unit. Again, in your vocabulary sheets, please find the term operational objectives and include that definition in those sheets. Then highlight the words short-term targets and business unit. Again, if you're describing operational objectives, you should try to remember to include these highlighted words in your description. In the table in your summary books, you can now describe the purpose of operational objectives as being to set the short-term targets for a business unit. As we've said, these objectives are short-term, that is, they are objectives that should be achieved in less than a year. That could be anywhere from a couple of days to up to 12 months. And also importantly, like tactical objectives, operational objectives relates to individual business units rather than to the business as a whole. So from that dot point, you should be able to describe the nature of operational objectives and fill that in the third column of the table in your summary books. An example of an operational objective is an objective for the sales department to increase its sales of product by 10% over the period of 3 months. You can see that that is a short-term objective because the objective is to be achieved within 3 months, and it relates to an individual business unit, that is the sales department, rather than to the business as a whole. So again, that's an example of an operational objective that you could include in the fourth column of the table in your summary books. We now come to the third and final part of this video, which is where we look at the different types of business objectives. As you can see from this slide, there are 4 types of business objectives. The first type of business objectives is financial objectives. A very important financial objective is for a business to make a profit. If a business continually makes losses, then it's not going to last for very long. The second type of business objectives is marketing objectives. A very important marketing objective is for a business to increase its market share. By increasing its market share, that is by selling more products to customers, the business will increase its revenue, which will hopefully lead to an increase in the business's profits. You can therefore see that the objective of increasing market share is both a marketing objective and a financial objective. The third type of business objectives relate to meeting shareholder expectations. You'll recall that shareholders are the owners of a company, and it's very important for a company to keep its shareholders happy. This is because one important way in which a company raises money is through selling its shares to shareholders. If the shareholders of a company are dissatisfied with the company for some reason, then they won't buy shares in the company, and so the company won't be able to raise money in this way. One reason that shareholders buy shares in a company is so that they are paid dividends. That is, so that they receive a part of the profit that the company makes each year. If the shareholders are dissatisfied with the level of dividends that a company is paying, then they won't buy any more shares in the company, and so the company won't be able to raise any more money from its shareholders. The fourth and final type of business objectives is social objectives. These objectives are not directly related to financial or marketing objectives, but they are focused instead on the role of the business in the community. Now, this does not mean that achieving social objectives is inconsistent with a business also achieving its financial and marketing objectives. For example, if a business has a social objective of reducing the amount of plastic that it uses in its packaging, then that is something that is likely to appeal to environmentally conscious customers. And environmentally conscious customers will then buy more of the products that are produced by that business. If these customers buy more of the products that are produced by the business, then this will increase the revenue of the business, and that should also increase the profit and the market share of the business, which are financial and marketing objectives. Let's now look at each of these types of business objectives in a bit more detail. For the purposes of helping you to summarize the information that follows, I want you to draw up a table like that on this slide in your summary books. You'll see that this table has 2 columns. In the first column, you'll be listing the different types of business objectives. That is, financial objectives, marketing objectives, shareholder expectations, and social objectives. For some of these objectives, I've broken them down into further more specific kinds of objectives, such as the objective of increasing or achieving a certain level of profit. In the second column, I want you to define these different types of business objectives, and this is the information that you'll get from the slides that follow. You'll recall that the first type of business objectives is financial objectives. And here we have a definition of financial objectives which you should include in your summary table. Financial objectives are objectives of a business that relate to the desired financial performance of the business. There are 4 specific financial objectives that you need to be familiar with. The first is the financial objective of increasing or achieving a certain level of profit. Profit is the amount by which the revenue of a business exceeds the expenses of the business. Make sure you include that definition in your summary table. As I've said before, if a business is continually making a loss, that is, if its expenses continually exceed its revenues, then it's not going to last for very long. The second specific kind of financial objective is the objective of increasing or achieving a certain level of market share. Market share is the percentage of the market controlled by the business. That is, it's the business's share of total sales in the market. Again, make sure that you write that definition in your summary table. To give you an example, let's assume that $100 million worth of hamburgers are sold in Melbourne each year, and that there are 3 competitors in the hamburger market, that is, McDonald's, Hungry Jack's, and Grilled. Let's further assume that McDonald's sells $50 million worth of hamburgers in Melbourne each year. In that case, McDonald's has a 50% market share. That's its $50 million that it earns from selling its hamburgers as a percentage of the $100 million of hamburgers that are sold each year in Melbourne. If Hungry Jack's sells $30 million worth of hamburgers in Melbourne every year, then it has a 30% market share. That's $30 million as a percentage of $100 million. And if Grilled sells $20 million worth of hamburgers in Melbourne every year, then it has a 20% market share. That's $20 million as a percentage of $100 million. The third specific financial objective is the objective of increasing or achieving a certain level of sales. Sales is the revenue that the business earns from the sale of goods and services. Again, include that definition in your summary table. The final specific financial objective that we need to be aware of is the objective of increasing or achieving a certain level of productivity. Productivity is the output produced per unit of input used. The more output that a business can produce using the same quantity of inputs, such as labour, raw materials, and so on, the more output that the business can produce using the same quantity of inputs, the more productive the business is. Again, make sure that you include that definition in your summary table. We now come to the second type of business objectives, which is marketing objectives. Here is a definition to include in your summary table. Marketing objectives are objectives of a business that relate to the demand for the goods and services produced by that business. Now, the specific kind of marketing objective is one that we've already looked at, which is the objective of increasing or achieving a certain level of market share. As we've just seen, market share is the percentage of the market controlled by the business. That is, it's the business's share of total sales in the market. So again, put that definition in your summary table. The third type of business objectives are business objectives that relate to meeting shareholder expectations. Shareholder expectations are the expectations that shareholders have of their company. Please write that definition in your summary table. You'll recall that shareholders are the owners of a company. And as owners, shareholders in a company have 2 main expectations of their company. The first expectation is that the company will make a profit. It's only if the company makes a profit that the company will be able to pay a dividend to its shareholders. This is because a dividend is a distribution of a company's profits to its shareholders. If the company doesn't make a profit, it can't pay any dividend. One of the main reasons that shareholders buy shares in a company is so that they get paid a dividend every year. And that's important to shareholders because that is the return that shareholders earn on the money that they have paid to the company for shares in that company. So one important expectation that shareholders have is that the company will make a profit, and as a result, the company will have a business objective of making a profit. The second main expectation that shareholders have of their company is that the value of their shares in that company will increase. So, for example, if a shareholder spends $100 on buying 100 shares in a company, that is, if the shareholder pays $1 per share, then that shareholder will expect that the value of those shares will increase from $1, say, to $2 over the course of 3 years. And that's important to the shareholder because if the shareholder wants to sell its shares after 3 years, then it wants to make sure that it earns a profit on those shares. That is, the shareholder wants to make a capital gain. If it's paid $1 per share and it can sell those shares for $2 per share, then the shareholder has made a profit or a capital gain of $1 per share. If instead the value of the shares in the company decreases so that the shareholder has bought those shares for $1, but when it comes to sell those shares, it can only sell those shares for 50 cents, then the shareholder will be very unhappy because it has then made a loss on the sale of those shares equal to 50 cents per share. So the expectation of shareholders is that the value of their shares in the company will increase, and this in turn means that companies will often have an objective that the value of the shares in the company should increase by a certain amount over a certain period of time. It's important for companies to meet the expectations of their shareholders, and this is because one important source of money for companies is the money that shareholders pay to buy shares in the company. If shareholders are dissatisfied with a company, they won't buy shares in the company, and that company won't be able to raise money from the sale of shares in it. And this in turn might mean that the company is unable to obtain the money that it requires to operate and invest in its business. It's for this reason that companies want to meet the expectations of their shareholders, and it's for this reason that shareholders can influence a company's objectives, specifically the objective that a company has about making a profit and the objective that a company has about the value of the shares in that company and how that value will increase over time. So now you can fill in more of the relevant sections of the table in your summary books. The fourth and final type of business objectives is social objectives. Social objectives are objectives of the business relating to the role of the business in the community. Please write that definition down in your summary table. Now, there are a range of possible social objectives, and I suggest that you just describe one or two of these in your social objectives can include providing community services or facilities. An example of this is Ronald McDonald House. Ronald McDonald House is a house that is funded by McDonald's, and it's used by the families of children who are undergoing treatment for cancer. More specifically, these families often live in rural areas and they're able to stay at Ronald McDonald House close to the hospital where their child is receiving treatment for cancer. Social objectives may also include contributing to community causes. An example here is SurveyMonkey. SurveyMonkey is a business that operates an electronic platform through which people can conduct surveys. It makes its money by providing this electronic platform to people and by allowing advertising on that platform. SurveyMonkey donates a part of the money that it raises in this way to charity, and in that way it contributes to community causes. Social objectives also include meeting ethical standards. An example of this is the Body Shop. The Body Shop has a policy that it does not stock or sell cosmetics that have been tested on animals. This policy appeals to customers who are concerned about the mistreatment of animals because cosmetics are tested on them. So by only stocking and selling cosmetics that have not been tested on animals, the Body Shop is meeting an ethical standard, that is, an ethical standard relating to the fair treatment of animals. Finally, social objectives may include using sustainable practices. An example here is Nespresso, which is a business that grows coffee and packages that coffee in pods that can then be put into coffee machines to produce the coffee drink. When Nespresso establishes a coffee plantation, for example in South America, it says that it does not cut down rainforest to plant the coffee plantation. Instead, it only plants its coffee plantations on land that has already been cleared. So you can see that in that way, Nespresso is supporting and using sustainable practices because it is not cutting down forest for the purposes of its coffee plantations. Similarly, Nespresso tries to reduce its carbon footprint by, for example, buying electricity that is generated by renewable sources such as wind farms and solar farms, rather than by buying their electricity from coal-fired generating stations which use up coal, which is a resource that can be depleted, and the burning of which also adds to environmental pollution. So again, in this way, by purchasing its electricity requirements from renewable energy sources, Nespresso is using a sustainable practice. And finally, Nespresso provides a system whereby customers who use its pods are able to return those pods to Nespresso once they've been depleted, and Nespresso then can recycle those pods, presumably to make new pods into which they can package their coffee. What you can see from all of this is that social objectives are not incompatible with financial and marketing objectives. On the contrary, many businesses adopt social objectives because they feel that those objectives are consistent with and will add to their financial and marketing objectives. Going back to the example of the Body Shop, because the Body Shop only stocks and sells cosmetics that are not tested on animals, those cosmetics are going to be bought by customers who are concerned about the ethical treatment of animals. And they will tend to buy all of their cosmetic requirements from the Body Shop. In that way, the Body Shop is able to increase the sale of its cosmetics, and that in turn increases its market share and also its profit. So you can see here that by adopting a social objective, the Body Shop is also achieving its financial and marketing objectives. That brings us to the end of this video. Remember that there are two things that you now need to do. The first thing is to read the pages from the textbook referred to on the first slide. If you find any information from that reading that you think is useful, then supplement your notes with that information. The second thing that you need to do is to complete the worksheet that is attached to the Compass learning task that relates to this video. By completing that worksheet, you will be applying the concepts you have learnt in this video to case studies, and therefore you will be achieving the second of the learning intentions on these slides. Thank you very much for your attention.